Ladies and gentlemen, I'm just going to be honest with you, and perhaps I'm going to be the bearer of bad news in this video, but Nvidia reports earnings on Wednesday, and I see a lot of problems. I see a lot of things that could go wrong versus what Nvidia has to prove to make the stock go higher. So in other words, I'm not super thrilled about Nvidia earnings on Wednesday, and I think it is opening up a door of opportunity. And we'll talk about that here in this video. But first, let's start with the pillars of worry or concern that I have with Nvidia. And we should probably start with the news that just came out today. Because yes, there was news today about Nvidia that's not good. Walter Bloomberg reports from the information that Nvidia customers worry about snag with new AI chip servers. In recent months, Nvidia has asked its suppliers to change the design of the racks several times as it has tried to overcome the overheating problems, according to Nvidia employees who have been working on the issue, as well as several customers and suppliers with knowledge of it. Word of the repeated design changes have sparked anxiety among customers about a potential delay in when they will be able to use the racks. Now, the last information we had showed that Blackwell AI chips are on track to be shipped by the end of 2024. This was news that came out on October 24th after, again, several issues with development. They were delayed, okay? But now they're back on track. But now they might be delayed again. The weirdest thing of all is it was actually reported about 4 days ago that Nvidia has shipped the first Blackwell chips to SoftBank. But now that we hear there could be issues with that. So I think this throws another layer of uncertainty on Nvidia's earnings. And for a company like Nvidia that is priced for perfection, news of a further delay of Blackwell shipments will be a problem for the company. Keep in mind, Nvidia is a company that has executed perfectly over the last 2 years. Now, as I was scrolling through X, I found this article written on justdario.com that says SMCI, the nuclear nothing burger that can expose Nvidia's shenanigans, Part 2. And clearly we all know what is going on with SMCI. They're going to be delisted soon if they don't provide their audited 10K filing. Now, this has happened before. SMCI was delisted in the early 2000s for accounting issues. They were sued for accounting fraud, and this is not really a new thing. It just hasn't happened in a long time. Well, SMCI is Nvidia's third largest customer, and it was reported in recent weeks that Nvidia has started diverting orders away from Supermicro as a potential delisting and DOJ investigation loom large. There is some uncertainty to how this could impact Nvidia's business. And just for a little bit of context, for Nvidia's Blackwell chips, SMCI alone officially accounted for 1/4 of all the future orders of Blackwell GPUs. So 25% of the Blackwell GPUs that have been pre-ordered by SMCI. And if Nvidia is trying to distance themselves from that, that could be an issue. Not for this last quarter, not for the report that we're getting on Wednesday, but that's going to be potentially bad for future quarters. And if you don't know this by now, let me enlighten you. Wall Street gives a rat's ass. They don't give a crap about what happened last quarter. You might think so, we don't. We care about what's going to happen over the next quarter, and the quarter after that, and the quarter after that, and the quarter after that. The markets are always forward-looking. That's why a company can have great earnings, beat top, bottom line, everything's great, buybacks, dividends, all this stuff. But then if they give you bad guidance for the next quarter, it's over with, okay? Now, Nvidia's in that camp too, okay? It's all about guidance. Now, this article says, take a look at Nvidia's history with the SEC. 2003, they had accounting fraud charges. Around the same time, SMCI also had those issues. Now, don't be mad at the messenger here. This is just what has historically happened. SMCI and Nvidia tend to have that close relationship. 2014, Nvidia employee did insider trading worth about $500 million at that time between 2009 and 2010. And in 2018, Nvidia had charges pressed for misleading disclosures. It goes on to say, despite the PwC certifying the latest Nvidia 10K annual report, as it has done since 2004, despite all the troubles with the SEC, the auditor highlighted a, quote, critical audit matter in the financial statements. What was this about? Valuation of inventories, provisions for excess or obsolete inventories, and excess product purchase commitments. Get this. It says the principal considerations for our determination that performing procedures related to the valuation of inventories, specifically the provisions for excess or obsolete inventories and excess product purchase agreements, is a critical audit matter are the significant judgment by management when developing provisions for excess or obsolete inventories and excess product purchase commitments, including, this is highlighted in yellow, developing assumptions related to the future demand and market conditions. This, in turn, lead to significant auditor judgment, subjectivity, and effort in performing procedures and evaluating management's assumptions related to future demand and market conditions. It says, so on one side, you have SMCI that was critical to NVIDIA's supply chain since their cooling server technology, according to NVIDIA, was critical to running NVIDIA GPUs efficiency. And the last part that I really want to share from this article, because we still do have some time before NVIDIA's 10K comes out, I'm just trying to show potentially how this could impact maybe guidance, is this. If it is confirmed that SMCI again accounted as revenues, products, and services that were instead delivered and paid for by its customers, isn't it logical that this is going to impact NVIDIA's $14 billion of accounts receivable reported in the last 10Q, since SMCI won't be able to pay for the GPUs NVIDIA delivered before? Now, I think this is more of a longer term issue. Not a super long-term issue, maybe an issue that could come up again over the coming months. If NVIDIA's, 10K comes out and it looks a little weird, then obviously that's going to be a problem. But what I think that highlights is the relationship between SMCI and NVIDIA, and SMCI's problems that could indeed impact NVIDIA. Now, is this a guarantee? Obviously not. Maybe there is so much demand that SMCI's problems are just irrelevant. Maybe you can take away 25% of NVIDIA's business and it just gets replaced. Maybe that's possible, but I don't think the markets have discounted the risk in that actually happening in NVIDIA stock. Nvidia stock hit an all-time high of $149.77 per share. You're currently sitting at just about $143 per share. Yes, you came down about 2.7% or so on Friday, including the move higher in after hours. But you have not priced in what this could mean for Nvidia. Now, that's one way to look at Nvidia earnings, and that's the first problem that I see here. On the other hand, from more of a simplistic point of view, the comps get harder. So earnings are compared on a year-over-year basis, generally speaking. When a company reports their revenues up 20%, they're really talking about 20% from a year ago. So Nvidia really started to take off in the year-ago quarters, right? So now it becomes hard to post impressive growth. This is going to be the first quarter that we are expecting less than 100% year-over-year growth from Nvidia. The growth rate is going to slow down. And that's not because we're expecting the business to do bad. We're just expecting the law of large numbers to start pushing the growth rate down. Now, what tends to happen when you push that growth rate down, for good or bad reasons, the stock does not tend to react good to that. As you can see here, these are the expected earnings for this Wednesday. So for the third quarter of fiscal 2025, Sales are expected to be 32.5 billion plus or minus 2%. On a GAAP and non-GAAP gross margin basis, they are expected to be 74.4% and 75.0% respectively, plus or minus 50 basis points. No EPS forecasts were given in the management outlook. However, it is likely Nvidia will beat its earnings estimates. Nvidia pretty much always beats, and I think they're going to again. The problem is, look at these prior quarters and the beats that we have seen. Okay, so for Q4, you're going to be comparing to Q4 2023. The growth rate's still going to look pretty good, right? Just judging from this standpoint. But it gets a lot harder as you go over coming quarters as these numbers really started to ramp in, again, late 2023 into early 2024. Once you get to Q1 2025, that growth rate is going to start slowing down. It says here, Nvidia is predicted to report 69 cents in EPS, somewhat more than the 65 cents reported on August 28th, 2024, but the growth rate is slowing down. The conclusion of this article says, overall, I consider Nvidia to be a highly overvalued company with brilliant, albeit slowing sales and earnings growth rates. The corporation is highly popular among investors and has leading market positions, but this does not mean it is a smart buy right now. The competition is getting tenser while the growth rate is slowing down. At the current price, you would not enjoy the necessary safety margin. So my investment rating remains unchanged, namely at hold. And Nvidia has really enjoyed the last 2 years of basically not having any competition, but AMD's new AI GPUs are starting to ramp, and AMD has taken some, yes, small amounts, but some market share from Nvidia. Now that Blackwell is having these issues, it is not far-fetched to say, will Wall Street get more concerned about maybe competition for Nvidia? It's one of those situations where if you're the upcomer, right, and you have zero market share, it's a little easier to be optimistic that you can take some market share. That was the whole story with AMD from like 2014 through 2020, was not about AI or any of that. It was about AMD taking market share from Intel. And they did a great job at doing that. And in 2014, it looked like there was a lot of room to take market share from Intel, because there was. Well, think about that in context of Nvidia. Nvidia is the top dog. They have 85% of the market. They had 95% of the market, a year ago, right? They have lost some market share. And now they have more to lose than to gain. You can only gain so much when you're at 85% market share. So I think that is a concern that investors could have for Nvidia earnings. Now, I think Jensen Huang, Nvidia CEO, is going to say kind of the same thing that he said before, that they don't see any competition, but the issue could become pricing around Nvidia's products. See, similar competition, like in AMD's, chips, yes, they're not as good as Nvidia from what we can tell. They're a lot cheaper though. $7,000 to $10,000 get your hands on AMD's GPU, AI chips, whereas Nvidia is commanding $30,000 to $50,000 for their H100s, right? H200s. The pricing measure or metric could get compressed, and that would be the issue. Now, if we get that in official guidance, or if the markets start to assume that, is really the big problem, because that's going to hurt margins and that's going to hurt profitability, thus hurt Nvidia stock. Nvidia is just trading with no safety. Okay, there's no margin for error in Nvidia, and especially if Wall Street gets even more excited about Nvidia as we get into Wednesday's earnings, if the stock perhaps rallies maybe Monday and Tuesday, or does not sell off, in other words, then I think you're setting yourself up for an even bigger issue. Now, Nvidia has a history of selling off even on good earnings sometimes, right? This is not uncommon to see Nvidia sell off 5-10%, even with great earnings, with great guidance, with a very strong expected growth rate. This time around, we have issues with Blackwell. We have 25% of Nvidia's business that could potentially disappear with SMCI, and it looks like Nvidia's already trying to kind of cut them out. You have, again, the growth rate that is slowing down. You have competition that could start to heat up, and you have a pricing problem at Nvidia that could come up because Nvidia's GPUs are not supposed to be $30,000 to $40,000. That is not the MSRP. The MSRP is around where AMD's GPUs are priced at, $10,000 to $15,000. That's where H100s, H200s should be at. Just demand has been really high. Companies could very soon start to opt towards cheaper alternatives, and that's a problem. Now, there's also the problem of there's only concept plans to actually monetize AI, and really companies are not doing that yet. So that could be an issue. I'm not super concerned about that. I think companies just want to get ahead of the AI boom. There's more of a risk, as Google's CEO said, that they don't invest enough rather than they overinvest. So companies would rather overinvest than underinvest. And I don't think that's going away. I just think there's a little bit of, bad expectations around Nvidia. I personally don't like when a stock is priced for perfection, especially when there are all of these risk factors that are not being accounted for. So in terms of what actually happens with Nvidia, I have no idea. I just think the risk is of downside. And I think if there was any quarter for material downside, it's going to be this quarter. Because of that growth rate that is expected to slow down sharply over the coming quarters. Wall Street does not like when growth rates slow down, even if it is for the right reason, even if it is because the business has just grown so large, right? Nvidia's growth rate slowing down is not a bad thing for the company, right? It's just the law of large numbers, what tends to happen when you become a more mature company. And Nvidia is, by any definition, a very mature company. Now, I do think all of the attention is going to be on Nvidia earnings, but I do believe we have bigger problems coming as well. Maybe before the inauguration, maybe, after the inauguration, but it really comes down to trade, Trump, and China, right? Does a new US-China trade war start to kind of happen? If that happens at some point, mix that with Nvidia, maybe that takes a back burner, which is my expectation. You could be in a bigger, larger problem for markets. Back in 2018, from about October 3rd through December 24th, Christmas Eve, the S&P fell 20% based on an incoming US-China trade war. It wouldn't surprise me if Wall Street gets a little nervous about that over the next coming weeks. And that's something to be continued. It's something I'm watching for. But I think the main concern for this week is clearly going to be Nvidia earnings, because the S&P and the NASDAQ, they are Nvidia, right? Nvidia is those indexes because Nvidia controls really the broader cohort of big tech names. If Nvidia does bad on earnings, everything's going to sell off, right? All big tech's going to sell off. Perhaps small caps and mid caps and cyclicals and value doesn't have to sell off, but definitely big tech. And big tech accounts for almost 40% of the S&P and more than that of the NASDAQ. If you see those stocks sell off, the indexes themselves are not going to do well. Now, if that happens, I really want to see what happens with the rest of the markets. If the rest of the markets rally and just big tech sells off, that's a rotation. That's a great sign. If big tech sells off and the rest of the markets sell off, that's a really bad sign for our markets. So that's something I'll be watching closely heading into Wednesday. I do think there is opportunity here, as I explained earlier, to potentially trade around Nvidia. Now, this is not for the new investor here, right? This is not to YOLO your portfolio. None of this is a guarantee. None of this is a financial recommendation. But I do think with Nvidia where it is at, assuming this stock just does okay on Monday and Tuesday and does not collapse, I think there's an opportunity to trade Nvidia to the downside before and after Nvidia earnings. Now, I do want you to keep in mind, Nvidia is pricing in about a 9.5% move on Nvidia's earnings, which is the largest move Nvidia has priced in the options market in a while. So options are not going to be cheap. I think you want to get your initial investment back as soon as possible before Nvidia earnings do come out. That's one of my favorite strategies. Is going in with 5 or 10 contracts, flipping the IV the day of or a couple days before earnings, holding a contract or two for free, getting your initial investment back, and riding out those free contracts. I've hit some big trades doing that. Not financial recommendation. Obviously, if you've never traded before or you don't, if all of that just went over your head, don't even look into it. It's not for you, dude. Just don't, okay? But you are pricing in quite a bit. So there is some opportunity here. Now, I think perhaps in the S&P and the NASDAQ, you get a better bang for your buck. If Nvidia were to sell off 9.5%, the markets are going to be in a really bad place anyways. So I think it's not just Nvidia with the opportunity for some hedging, for some trading. It's also likely the S&P and the NASDAQ indexes. So again, these are just my thoughts. We'll talk about this a little bit more as we head into Wednesday. I think context will be important. If Nvidia sells off 5 or 10% before their Wednesday earnings report, the odds are, that the stock may go up after earnings. Now, if the stock sells off, rallies into earnings, the odds grow larger that the stock can actually rally after earnings. So it's all about expectations. But if we pull up a just simple line on this chart to chart the support on the weekly candlestick chart, ever since the stock really took off in the beginning of 2024, you can clearly see a defined uptrend, which would be tested around the 130 level. If you get a break below that, then you could potentially fall back to that $99, $100 level, which would be your 50-day moving average on the weekly candlestick chart. And if Nvidia does throw some concern in their earnings report, or Wall Street does not like the growth rate slowing down, that is a possible level we could go to. I mean, we were just trading in the 90s in August, right? That is a possibility. And I think that's where the opportunity would be in potentially even shorting Nvidia heading into Nvidia earnings. If we did get some kind of fall like that, really to break the uptrend, that would be really problematic for the markets. And I would imagine that would cause a large downside for the S&P and the NASDAQ indexes as well. So let me know what you guys think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.